In this video, I'm going to explain the use of the Trendlines for trading supply and demand imbalances. Okay, and this is crucial. Drawing trendlines, even though we could get rid of them if we wanted to, it really helps us to be very precise and very mechanical in our approach to trading. Like I said, we don't need the trend lines, but they are really useful the way that you're going to learn how to draw them. Okay, there are, I don't know, unlimited ways of drawing trend lines. I've seen many people drawing so many different type of trend lines, and obviously they do it because they follow certain rules. Although I've seen some of them that just don't really understand. Okay, it's like they say, okay, I'm going to draw a trend like this. Okay. Which is okay, it looks like, yeah, okay, but what about this? Is not like touching or the trend line or anything, or this one over here, this one yes, this one yes, okay? So it's or even more rare trend lines, okay? But we're not gonna talk about how other people draw trend lines, okay? We are going to talk about how we should be drawing trend lines and why. Not only how, but the most important question here is why should we draw the trend lines the way you're going to learn right now. And this is very, very important because as you move or progress in the course, you will learn about certain other aspects like chain analysis and the realignment rule, which are very crucial, same way as consolidation away. This is really important. So realignment and multiple time frame analysis rely on the use on the trend lines, the way that you're going to learn, and you will see the logic as we move on in the course. Okay, so I was analyzing some charts and I came up with gold. Okay, spot gold XAU versus the American dollar. Okay, and this is the 4-hour time frame. So I'm going to use some charts, some different time frames. The rules apply the same. Okay, so since you have learned about CPs and valleys and peaks, swing lows, swing highs, you should remember that we do not use continuation patterns to draw trend lines. Okay, unless there is overextension, but that's something we're going to talk later. Okay, so we are going to use valleys like this one or this one, and we are going to use peaks. This is a continuation pattern, rally based rally. We do not use that one. This is a continuation pattern, drop based drop. We do not use that trend line, that structure to draw a trend line. We do not draw a trend line like this. Okay, why? Because this is not a peak. As you might say, wow, but look at this bearish week. It's like very high above this open and close. Nope. This is the same structure. Okay, same price action area, same range, and there is not a large movement on the way up, and that is not a peak. Okay, so the same way that this is not how we draw a trend line, because this is a CP, so it is not possible to draw that trend line. So refer to the CP lessons to learn how the CPs are drawn and why. Okay, and also refer to the valleys and peaks lessons, okay, so that you learn how a valley and peak are located and drawn. Okay, because many people struggle with CPs, and as I said at the beginning of this course, I mean, I've been coaching hundreds of people, thousands probably, and all of them without exception, okay, all of them struggle with CPs and valleys and peaks. They say, yeah, I know this is very simple. Okay, this is like a peak and this is a valley, blah, blah. But when it comes to these structures, that's when they start struggling, all of them, okay, without exception. So, as the Trendline lesson explains, this video is an explanation, okay, of how that lesson becomes like a living example, okay. I'm going to remind you what a valley is. Okay, we need, like in this case here, we need a large movement on the way down, basing structure, and then a move. Okay, a leg out with ERCs or many 50% candles that but becomes a leg out, okay? Legging, base, leg out. And the same is true for the peaks. Legging, base, leg out, okay? So for a trend line to be drawn, we are going to draw the latest 2 consecutive valleys or peaks, the latest 2, okay? So we need a V shape like this, the leg out prints this high, and then we need another V shape, okay, that prints a higher low, okay, and prints a higher high. We don't want this, okay, because this is a low. This would be like a bearish red line or a bullish. And the same is true for the peaks. We need this. So once we have that, we can connect the trend line. And we will always, when we look at a chart, at any chart, at a live scenario, like right now on gold spot, we start from the right. We don't start like here, okay, I'm going to draw a trend line like this. Nope. Okay. We start from here and we go back in time, following price action and asking the chart what the structure that we're looking at is. Okay. When we see a basing structure that price pulses, we ask. Okay. So here we've got like one block underneath another block. So this is a valley. Okay. So we would have our first valley here. So we go left and we stop when we bump into candlesticks. Okay, here we've got nothing. We continue to go down. Okay, we've got a basing structure up there. And this is the leg in, base, leg out. So in the end, we've got a V shape, another V shape, and this matches with the tilted W that we were explaining like 2 minutes ago. Okay, so the trend line would be drawn like this. Okay, so as I said before, this is a CP, so we do not draw the trend line like this. And this is a CP, so we do not draw the trend line either. Okay, so that is the closest or the nearest, okay, bullish trend line for gold spot on the 4-hour time frame, connecting the latest 2 consecutive, and they need to be consecutive valleys. Okay, and why are we drawing it like this? Okay, and why the last 2? Because once the trend line is broken, as you will see in another video, when the trend line is broken and everything, we will consider that this time frame is out of alignment, no longer in an uptrend. And then it tells us that when that happens, we have to look at one time frame higher than the 4-hour. And the next one is the daily time frame. And that is the basis, okay, the foundations for the realignment concept for multiple time frame analysis. Okay, but we're going to talk about that later. Okay, but this is the reason why we are drawing it that way. So we continue to going back, following all the candlesticks. This is obviously a peak. Okay, but so we've got one peak. Do we have anything on the left? No, because this is all-time high. And as crazy as it seems, gold spot broke is almost going to reach $3,000. And that's insane. Okay. So we don't have 2 peaks, so we cannot draw a trend line from here or there. So this is the latest valid trend line. This is a CP, but this is a valley. Okay. So we have already detected a valley. Okay, so we need another one that goes like this. Okay, lower low. Okay, so where is it? Because this is a rally based rally. This is a CP, so we don't use this. This is a rally based rally. We don't use it. So here we've got a drop and a rally. All these CPs, okay, are part of this leg out for this valley, and all this is the leg in. Okay, so the previous trend line would have been something like this. Okay, connecting one value over here and another value here, number 1 and number 2. So if we use the replay functionality and we hide this price action, if gold spot was doing that on the 4-hour, we would have a bullish trend line right there. This would be the latest valid trend line because it is the one that connects the 2 consecutive valleys. Okay, so let me undo the replay. So these are the two latest trend lines for the 4 hour. As explained step by step, we are ignoring, okay, this is part of the valley, this is not a CP. This is a mistake that many people do, okay? Okay, this is a rally based rally, this is a CP, and they will draw something like this, okay? Nope, because all this is part of the same structure. Multiple candlestick patterns, okay? All this is the same pattern. So we just cannot isolate two individual candles within a bigger structure candlestick pattern, okay? We have to consider everything, okay? So we've done the 4 hour. So I'm gonna switch to the daily time frame, and probably this is going to be a daily structure. So I'm going to remove all the objects from the 4 hour time frame, and I'm going to switch to the daily time frame. Okay, good. So breaking all-time highs. What we've got here is this. This structure, what is this structure? I mean, I'm gonna give you like 5 seconds to think about it. Is this a valley or is it a CP, continuation pattern? If you are trying to read price action and say, okay, this could be a CP, this could be a valley, then you are probably wrong. Why? Because if you just think about it, I mean, the fact that you are thinking about it means that it is not a valley. Because if I ask you, is this a valley or a CP? No doubt, my friend, this is a valley, this is a peak. This is a peak, this is a valley. The problem comes when we have this kind of structures, okay? So one rule explained in the lessons states that if you doubt about a certain price action structure, okay, consider it a continuation pattern. It cannot be a valley or a peak, okay? Will you be right? Will you be wrong? You don't care. You don't consider it a valley or a peak. It doesn't matter. So in this scenario, we have on the daily time frame after breaking all-time highs, okay, we are today is the Thursday, 30th of January 2025, and gold spot is breaking all-time high after weeks trying to. It is a pity that it didn't pull back to this daily demand level that mentioned on the website. I just continue to rally. And we've got, this is an unclear structure, so it should be considered a continuation pattern. This is a clear continuation pattern. Say leg in, base, leg out. So this one would be a demand level, okay? This one is rally, base, rally. Another CP, but you might say, but well, we've got an ERC candle, a drop, rally. No, but this is all in the same range, and there is this cannot be compared to this large movement down, leg in, base, leg out. Here we don't have a leg in. Leg in should have been something like this for this structure to be considered a valley. Okay, so since we have 1, 2, and 3 consecutive CPs, there is a rule, the overextension rule, that says that we can draw a more aggressive trend line connecting the latest 3 or more CPs. So the valley trend line would be like this, okay? This is a more advanced type of drawing trend line, the only one, the only tricky advanced way of drawing trend lines, okay? So, but it's great that it comes up on this scenario, because this is an important thing, okay? So when we take a look at this price action, okay? Sorry. When we take a look at this price action over there, let's try and come up with what's going on here, okay? So we've got a rally and a drop, which is also another way of locating peaks, not only rally based drop, because there is no base here. And then this is a valley, a peak, sorry. So when we go left, we bump into this structure, which is a CP, okay? So can we draw a trend line like this? Nope, we cannot, okay? Because this is a peak. Okay, but here we've got the second peak, Okay, because if we continue to follow price action, we bump into this structure. And this is clearly a peak. So we've got here peak number 1, peak number 2. Okay, great. Let's draw the trend line like this. Okay. Good? Nope, it is not good. Okay? It is not okay. But you will see many people drawing trend lines like this because these are like obvious peaks and everything. But this is not correct. Why? Because this is a rally, okay, and a drop. Okay? And what happens is this, that all these over here, these leg out prints this low. So for these peak, okay, for this trend line to be correct, this second peak needs to go below this low at 2,500. Okay, and it didn't happen. Remember the rule: one peak like this, another peak like that, and the leg out of the second peak needs to break the low of the leg out of the first peak, forming a tilted M. Same way likewise for the bullish trend line, okay? Something like that. And it obviously doesn't happen like that. So when we take a look at this, that way we come up with the conclusion that this is an invalid trend line. And this is the kind of thing that you are going to have to do all the time, okay? So, but let's take a look at this. We've got like a drop. All this is the same structure, okay? Base and a rally. We've got our V shape. Structure number 1, okay? Structure number 2, we continue to the left. And we've got a large leg in, ERC candles, 2 basing candles, and the leg out. So the leg out, the V shape, prints this high. So this is the first V, okay? And then the second prints a high above the previous high that complies with the rule, okay? So see the difference between this one over here with this one and that one? So this is what we need. We need a V shape, okay? That prints a high, and then we need another one, a consecutive one, okay? That prints this high. A high above the leg out of the first valley. So the trend line would be drawn like this. Okay, we cannot. Okay, but the valley is over here. We do know that we cannot cut through candles. Never. Okay, if you see that the trend line is cutting through candles, it is incorrectly drawn. Okay, you cannot cut through candlesticks. That's forbidden. Okay, forbidden. So what happens here is that these are the latest 2 bullish trend lines. For the bearish trend line, there is no possibility to draw any bearish trend line over here. Okay, so since we are with gold, let's jump to the weekly time frame, for example. Let's use the weekly time frame. Oops, sorry. 1 week. Okay, so this is what we have. All-time high is broken. So we've got a drop base rally. This is like some people would say, okay, this is a drop rally base drop. Okay, I'm gonna draw the trend like this. Nope, because you can see this bullish engulfing pattern, which is like a drop in the rally, establishes this range. And all these candles happen within that range. So all these candles are part of that one single structure, not 2. Okay? So we don't draw the trend line like this. Okay? So this is the first valley that we can't locate here. So we consider, I'm gonna, use the ray line over here. This is the first valley. Okay? So we need now to go left, and we stop when we bump into price action. And there we bump into this structure. Is this a valley? No, it is not. It's it's a continuation pattern. This is a rally, leg in, base, leg out. And since it is made of 3 little spinning tops, 50% candles, rules, when you read the coding lesson how to draw the imbalances, you will learn that when there is a single little tiny basing candle or a series of small tiny candles within the same range, you will draw them, drawing the distal line at the lowest low and the proximal line at the highest high, including the wicks. Okay, that's how you would draw it. But it's a CP anyway. Here we've got another CP, rally based rally. Okay, here we've got another CP. Okay, so this is another example of overextension on the weekly time frame. We saw one on gold daily time frame. Okay, so this is how you would draw the trend line. Okay, if we want to connect 2 consecutive valleys, we need to continue to go down until we see this guy over here, which is a drop base, and all this is the leg out, and the leg out includes another trend line which is made of 4-5 consecutive continuation patterns. So we've got now our second over here, first one and the second. So we would draw the trend line like this. Nope. Well, you would say, okay, that's the valley, but remember this. Oh, let me disable this. Snap. So you would say, okay, so this is the valley trend line. Nope, it is not. Why? Because we cannot cut through candles. That's forbidden. And also remember that all this is part of the same structure. So we need to drag our trend line and draw it like that without cutting the candlesticks, those lows, because all these lows are part, okay, of the same candlestick pattern, which is a bigger one made of probably 6 candlesticks. So that would be the valid trend line. We never ever cut through candlesticks. Okay, that's the way you would draw the trend line on the weekly time frame. Okay. So as I draw trend lines on different time frames and on different assets, you're going to see how different nuances and how rules start to play out. We put together all the rules, and I explain the reasons why. This comes from years of experience analyzing the charts, and it really works. Okay, but always the latest too. Remember, because we need to do it because we need to apply the realignment rule, that it is crucial for multiple time frame analysis and placing a trade with a high degree of accuracy, days, weeks, and even months before price pulls back to the imbalances. So, okay, we are not gonna continue with gold spot. I'm gonna switch to, well, since we are with gold, let's take a look at silver. Okay, another commodity which is probably doing the same thing. Okay, and I remember that there is a trade playing out on silver spot. Okay, let me take a look at it so you can see how this plays out. This trade over here in the 4-hour, which was planned like a few days ago here. Okay, so we are expecting the elimination of this one, waiting for new imbalances, but I just remember about it since we were doing the analysis for gold spot. Now this is silver spot. Let's take a look. Let's do the same thing with 4-hour. Oh wow, yeah, that's why we've got the alert there. Okay, so this is what we've got here on silver. Okay, all-time highs not being broken because silver has more price action than gold, as you can see here. This is all we have. still quite a lot, okay? It's like 30% more for silver to break all-time highs, but that's what we are expecting, okay? So on the 4 hour, good. So we start, remember, from the right side always, and then we work our way back following candlestick, and we stop every time we see a structure, okay? We follow this that way. So what do we have here? We stop at this basic structure. Is this a valley or a peak? I can tell you that many students in the past would have said, okay, this is a drop and a rally. It is not. It's a rally, basic structure, and a rally. And how would you draw the trail line? Sorry, the trail line, the imbalance here. Like this? Okay? Nope. You wouldn't draw it like this. You would draw it like this. Because we've got 50% candle, another one. You will learn about this when you learn how to draw the imbalances. You draw it like this. What could happen is this: price drops down there, eliminates it, and then reverses, and it rallies. But you would have a loss. Why? Because you did not draw the imbalance like this. So you could be out of the trade for drawing the imbalance incorrectly. 2, 3 candlestick at the same structure. This is a CP, okay? So we continue to on the way left, okay, and down. This is the same structure as this one. The only difference is that this candlestick is like below those two, but these 4 candlesticks are within the same range, okay? So we've got another CP. We cannot connect 2 CPs. Remember that we can connect 2 valleys or 3 CPs. We've got 1 CP, 2 CPs, and that's it. So we cannot draw the trend line like this. But here we've got a valley. The legging, base, and all this is the leg out. Okay? So we have already detected one valley, and the valley is right here. Okay? This is the lowest low. So what happens is this. Now that we have located the first valley, we go left, we follow this line, and we stop when we bump into candlesticks. Okay, we don't go through them, we stop, and then we ask the question, what is this? Is this a CP or is this a valley? It is a clear valley. Legging, base, leg out. So the leg out prints is high. Okay, and this one over here prints a high above this high. Okay, so the trend line could be drawn, okay, like this. That will be the current trend line right now. The closest and latest valid trend line. You might argue, oh wow, but the high was printed here, not here. Okay, yes, true. But this trend line would have been the latest valid trend line if this price action didn't exist. But that price action did exist. So what happens? We will have this one and this one. Why? Again, we go back in time. This is a clear valley, drop, and then base rally. We go left and we stop here, and we've got another one. So this one, the leg out, prints is high, and this new leg out prints is high. So this would be the latest valid trend line. But we need to adjust the trend line as price action moves, okay, is created, okay? So this trend line would have been great, but then what happens? Prints a low and then another high with another leg out. So this valley here is not correct, okay? We've got this new valley, but we cannot draw the trend line like this, okay? Because this is a CP and another CP. So that's why this one is the right trend line. This one was the previous one, but once a new valley is created, we need to go left and find the previous valley, the one that precedes the latest valley. Okay, so I think for now it's enough for this asset, for silver spot on the 4 hour time frame. So I'm going to eliminate all this, and remove. And I'm gonna switch to another one. We saw already gold, silver. So let's take a look at, I don't know, the euro dollar. Number one, sorry, Forex cross pair. Okay, so this is the euro dollar. I'm gonna use the daily for now. So this is the euro dollar, okay? So remember, when we are doing live analysis, okay, when we're doing multiple time frame analysis too, we always start from the right side and we follow price action, always. Don't fall in the trap or, okay, this is a great peak, I'm gonna draw it like this. Nope. You have to be methodical, very, very methodical, and follow the rules that you are learning right now, okay? So, this looks like a peak, but we cannot draw any trend line because we need this peak and we need another peak. It didn't even print a low, so this is nothing. This is a continuation pattern. We've got a rally, base, rally. This is not a valley. Okay, they are large wicks, blah, blah, blah. Nope. I've been there. I mean, so many students asking about this, okay? This is made of 3 consecutive basing candles. Refer to the CP lesson and the 1-hour video that explains in detail what a CP is and how you should read price action, okay? So when we continue to the left, we've got this structure over here, and this structure, this is a clear valley here. Drop, and then it rallies, and all this is the leg out. So we've got one valley here. But in order to connect the bullish trend line, we need another valley, and we've got a CP here. Rally, base, rally, base, rally. 2 CPs, so we cannot draw the trend line. It's impossible. So we do not have the possibility of drawing a bullish trend line. So we need to continue, okay? We stop there. Is this a peak? Yes, it is. Rally, drop, and it prints a low. So we have already located our first peak. Here we don't have a second peak. So we continue to the left because this is higher than this. Is this a peak? Yes. Rally, base, drop. We've got our second peak. So this is what we have. This is the trend line, connecting 2 consecutive peaks. And as you will see, this is the tilted M, where we have high, lower, and lower low, with the second leg out printing a low underneath the first leg out's low. It's textbook, okay? Textbook. So that would be the latest trend line on the euro dollar on the daily time frames, okay? Following the rules step by step, reading every single candlestick, okay? That's how it works. So the thing is, which one would be the previous trend line, okay? The previous to this one, okay? This is the type of exercise you're gonna do if you are in a coaching program with me, on the online coaching program and the live Zoom sessions, okay? Where I'm gonna ask you, okay, draw me all the trend lines you see here. And you're gonna have to submit up to 20 exercises every single day, okay? Understanding this is one thing, but being able to do it yourself alone in front of your desktop computer is another thing, okay? So that's the reason why there is coaching for those who struggle with it. So, which is the previous one? So, we continue to the left, and this is not a peak. This is a drop, base, drop, a CP. So we cannot draw the trend line like this, okay? We ignore this one. We continue to the left, and this one is another peak. Rally ERC, base, drop. So that one is a valid one. So the previous valid trend line to this one that we drew would be from there to there, okay? So this would be the previous valid one if, okay, price action was like this, okay? But as price action continues to form, we have a new peak and a new low. So this trend line, even though it is a valid trend line, it is the previous valid trend line, okay? It is invalid right now, but it was the previous valid trend line, the one prior to this one, okay? So if we continue following price action, we've got here a valley, first valley. We go to the left, and all this is a valley too. Leg in, base, leg out. So the previous trend line would be something like this. Okay? So these are the latest 3 trend lines on the euro dollar on the daily time frame. Explain step by step. And this is the thing that you're going to have to do every single time. Okay? Why? Because the break of the trend line creates an imbalance. Okay? So it is, you're going to learn in the creation of an imbalance, and there will be a video and lessons that explain this in steps by step. Okay? So it is very, very important to know how to draw these imbalances, because these trend lines, because drawing them incorrectly will obviously give you a different trend analysis for this particular time frame, and then the multiple time frame analysis will be wrong, and the decision process will be wrong too. Okay? And the realignment rule, which is the core rule for supply and demand multiple time frame analysis, will not play out, will not work, because you have done this wrong. Okay? So if we go to the weekly time frame on the euro dollar, okay, let's delete all these objects and let's switch to the weekly time frame. One sec. It's 1W. Okay, there it is. So this is what we have on the weekly time frame. Okay, this is a clear valley. We start from the right, remember? But where is the previous valley? Obviously, you would have to go here to the left. But then this is the high, and this obviously hasn't printed a high. So makes no sense. Okay, not good. So what is this here? We continue to the left. This is a continuation pattern. It's a drop, base, drop. So we do not connect the trend line. Okay. So what is this over here? This is a rally, base, drop. Okay. So we've got our first peak. Here, this is a CP. It's a drop, base, drop. But you could argue, oh, okay, but it printed a high. This is a large candlestick, blah, blah, blah. Nope. Engulfing patterns, remember the CP lesson, the video and everything. The engulfing pattern is the most common pattern, candlestick pattern used or found at continuation patterns. So we need to continue to the left, another CP over there, drop, base, drop. And then this is the peak. Okay. So we've got one peak here and another peak there. But what happens here? Can we draw that without cutting through candles? No, we can't. So this is an example of the impossibility of drawing a trend line. It is not possible to draw this trend line. Okay. So that happens very rarely, but it happens. And it's good that we could see this scenario on the euro dollar, because it is important to understand that you just cannot force a trend line, and you cannot cut through candles. Okay, so the bearish trend line is not possible. So what about this price action? We continue over here, and let's see if we can draw a bullish trend line. This is a CP. Even though you could argue, well, but look at this candlestick closes. I'm going to zoom in a little bit more. Okay. This candlestick closes underneath this one, blah, blah, blah. And then there's a large wick. No, it is not. 50% candle establishes a range. And this wick is just nothing. Okay. Had we had a very large wick, okay, larger than the average, then it is a valley, which is another rule. Okay. But this is a wick, which is like this one, average, like this one. This is nothing. It's just a wick. Okay. So we continue to the left, and this is a clear valley. Leg in, base, leg out. All this is the leg out. We continue to the left. This is a rally, base rally CP. We don't use it. And here we've got another valley. We've got one here, one there. So this valley, leg in, base, leg out, prints this high. We need another leg in that doesn't go below the previous valley. That is true. Basing a structure, and then we've got another leg out that goes above the previous valley's leg out. So this complies with the rule. The trend line could be drawn like this. Never cutting through candles. Okay? That's the way it is. That's the way it works. Okay? When we extend the trend line like this, okay? We're going to look at this when we learn how to draw imbalances, how to locate them, the intersection of a trend line, a CP intersecting with creates an imbalance, and also the origin of the move. So this would be another rule, but it will be seen on another lesson and video, okay? This is why the alert is set there and it's not set here, because this is a mess, a very bad price action, okay? So this would be the valid trend line at the time, okay? However, yeah, we're not going to talk about this. Let's switch to the, let's switch at the 1 hour time frame, okay? Because many of you will probably do lower time frames. So this is what we have here, okay? The 1 hour time frame, this is a very clear valley. Remember, we start from the right, so this is a valley. We go left, and we see this. So look at this wick over here. This wick is way larger than the average wick on the chart. Look at this wicks. This is the largest in a few days, even larger than this one. So how do we draw a trend line? Okay, like this. Okay, so this is not a CP, rally base rally, because we have this large bullish wick. Okay, is like probably, this is the body, probably 4 or 5 times the width of the body. So it just cannot be a pause. Remember that continuation pattern is a pause. Price rallies, is exhausted, and it takes a breath, and then again, takes a breath, again. But what it does not do is the rally, takes a breath, and boom. No. Okay, this is not a ZP. Okay, it's a valley. Okay, sorry for the sounds, but I'm sure that now it's way more clear. Okay, so that would be the latest bear bullish trend line on the 1 hour chart. Okay, so let's take a look at another one. Let's take a look at cryptocurrency too. Bitcoin is the first one that comes to my mind, but since I am always analyzing Bitcoin on these videos, let's analyze the second more important one, which is Ethereum, ETH. Okay, Ethereum. And let's take a look at the 4 hour time frame. Okay, so 4 hour time frame. This is what we've got here. Okay, 4 hour time frame. Start from the right. We go left. CP, rally, base, rally. We cannot use this structure to draw a bullish trend line. We continue to the left. What is this? This is a valley. Drop, you see one structure here, another structure there. So that's the first valley over there, okay? All this is part of the same structure. And then we've got this one over here. So we would draw the trend line like this, okay? One structure here, drop, and then another one. That would be the latest bullish trend line, okay? If we continue to the left, we stop here where we see this price action. What is this? This is a rally, base, a drop. Remember the void we talked about on the valleys and peaks lesson? That's it. So we've got number one over here. And when we go to the left, we've got another one here, rally-based drop. So the latest bearish trend line would be drawn like this. Okay? So this is the bullish trend line and this is the bearish trend line. And as you will learn in the trend lesson, a bullish or a bearish trend line means nothing. Means nothing according to the trend, okay? To explain or define a trend, we need accomplishments, as you will learn in another lesson, okay? We need imbalances being eliminated. A trend line alone is nothing because here we've got like a rally, another rally, but then what does it accomplish? It's nothing. It's just a higher high means nothing, okay? We need imbalances eliminated. We don't need higher high or a lower low. We need imbalances eliminated. Okay. 2 consecutive impulses and imbalances being eliminated for a trend to make sense. Otherwise, it's just nothing. Okay. So what happens here? We continue to the left. This is a CP. This is not a drop rally engulfing pattern. Okay. But here we've got a large movement all the way down. Okay. Legging base, leg out. So we've got a valley here. Okay. But here we've got another valley, but it doesn't print the high. So we just cannot draw the trend line like this. Okay. So we continue to the left and this is a peak, rally base and the leg out peak. Then we continue to the left. This is another peak. So this peak, that's like this, prints a low here. Another peak that prints another low. Isn't it? Would be, or the previous trend line would be something like that. Okay. And as you will learn in the creation of an imbalance, we've got an imbalance there, broken by this imbalance, and it is now trying to reach that imbalance. Very strong imbalance. So this would be the latest 3 trend lines on Ethereum for our time frame. Remember that the existence of a trend line means nothing, okay? For defining a trend, we need accomplishments, as you will learn in the trend line or in the trend lessons. Okay, so this is very, very important. So we have done the 4 hour. Let's take a look at the daily time frame. Okay, so the daily time frame, we start from here. Okay, as you can see, this is a real mess. Okay, so many candles over there. It's very difficult to distinguish what it is. This is unclear, but we've got a very clear peak rally. It bases on everything is the leg out. Okay, but as you can see, although this is a peak, it didn't print a low underneath this one, and that is necessarily because if we go to the left here, this is a clear peak, rally, base, and the leg out like this, and the leg out prints this low. Okay, so for this trend line over here to be valid, okay, without cutting through candles, okay, we need this leg out, okay, and we need a lower low. So although we have 2 consecutive peaks, it doesn't follow the rule that the second peak's leg out needs to print or should print a low underneath the previous peak's leg out. So this trend line is wrong. But if we continue to the left, we stop when we bump into this price action, this candlestick, and we go to the left to the top, and we've got a rally base drop, and there we have our peak. So that peak printed this low over here, and as you know, we agreed that this is a valid peak, printed this low, and this low here printed a low below this low. So the correct trend line would be drawn like this, which happens to be almost the same as this one that we had previously drawn from here to there, but this one is invalid. The last one that I drew, the one at the top, is valid. Okay, This is crucial because if you draw the trend line like this, okay, like before, then the trend line could be broken sooner than expected. But if it is like this, as you can see, not a single candlestick bumped or touched, okay, intersected with the trend line yet, okay? So this is the latest bearish trend line. What about the previous trend line, the bullish one? So we continue to the left. Remember, we stopped there for the bearish trend line. Here we've got a drop base rally, which prints this high. And if we continue to the left, we've got a drop base rally that prints this high, another one that prints another high. So we would draw a trend line like this, okay? The origin of the move creates an imbalance. That's how it works. So these are the latest two. You don't need to continue drawing the trend lines. I've got an alert set there because it's a weekly imbalance too, and this is the real deal is down there on Ethereum, okay? It's been trying to reach it for a few weeks. It just didn't happen yet. Hopefully it will bump into this and then drop, but we've got this wick over there that is preventing the Ethereum dropping down there to the weekly time frame, which you will see down there. This is the real deal down there. So these are the latest two valid trend lines on Ethereum. We could continue to the left. I'm gonna do one, okay, one more. Well, no, let's switch to another asset, okay? Like this, one of the most important cryptos too. Oh no, let's do a stock, okay? I didn't do any stocks. Like, let's do, I don't know, Starbucks. Because I recently went to the airport and Starbucks is everywhere. So let me delete all these objects. Starbucks, remember it was rallying, creating new areas of demand in the weekly. Okay, so let's do the weekly time frame because it's clearer right now, okay? So this is the weekly time frame on Starbucks. So the thing is, where is the latest trend line on the weekly? The valid trend line? Well, I believe if you pay attention to this chart for a second, you will know. This is the lagging, okay? Drop, very large candlestick bodies. The bodies are wide. Then the rally, the leg out, printing a high above the first or the lagging. So that's valid number one. This, we go to the left and we stop when we bump into the candlestick, and then we go down. We follow the candlestick and we stop when we see a basic structure. And there we have it. Drop, base, and rally. We've got another valley. The first one printed this high and the second one went out wolf. So the valid trend line would be drawn from here to there. Okay? As simple as that. So you don't need to go any farther. Okay? That was supply eliminated over there, blah, blah, blah. So we would have something like this as the analysis. We should have an alert set over here. If price drops down there to Starbucks, you might say, oh, wow, this is going to continue. I should buy breakouts, blah, blah, blah. That's not supply and demand trading. That's another thing. Okay. So this is Starbucks on the weekly time frame. Okay. So I'm going to use a smaller time frame for intraday. I'm going to use the 60-minute time frame. Okay. So what have we got here on the daily time frame? Well, tricky one. The 1 hour time frame, sorry. Tricky one. Why? Because this is a continuation pattern. This is another continuation pattern. This is a rally-based rally. This is a rally-based rally. This is not a drop rally. Okay? Okay, one sec. There it is. This is very tricky. Okay? This is a CP2, rally-based rally. So it's very difficult to draw this because the rules tell us that we can use 3 consecutive CPs to draw the trend line. We've got one here, one there, but we just cannot draw the trend line like a curved trend line. So drawing a trend line here is just impossible on the 1 hour time frame. Okay, but these over here could be an imbalance on the 1 hour. Yes, it is. Okay, you will learn in the creation of demand. There was a supply level over there, eliminated by this one, and look at the strength of this movement here. Okay, with a gap of about almost 2% gap. That's really great. We should set the alert over there for short term, intraday. So, but the lesson here is on drawing trend lines, okay? And sometimes it is impossible to draw trend lines. And we have seen two examples on the euro-dollar bearish trend line on the daily, and this one on the 1 hour time frame on Starbucks. So I'm going to use another example. This was Starbucks. Let's see, Expedia. Okay, it's a very important online travel website for booking accommodations and rent a car, cars, and so many things, trips and everything, flights. Let's use the weekly time frame. Okay, well, this is like very tricky. Okay, sorry. So we start from here. This is nothing. We stop. Okay, over there. This is a rally base and a drop. We've got our first peak, my friend. We go to the left. We stop because this is a higher high than this high. So now we can draw the bearish trend line connecting the two peaks. Okay. Do we have a downtrend? We don't know. We need accomplishments, and we are going to see that when we do the trend lesson. Okay. So this is what we have for the bearish trend line. What about the bullish trend line? So we continue to go down over there, and we see a drop, a base, and a rally. So we've got our first valley over there. Okay. We continue to the left, and we've got another one. Drop, rally. That prints this high, drop, base, rally, it prints another high. So the bullish trend line would be like this. Okay. That would be the latest bullish trend line, and this one would be the latest bearish trend line. Okay. If we continue to the left, this is a drop, base, rally. We've got another valley, and we follow price action, and we stop there, and we've got the legging large candlestick body, basing structure, and the leg out. Then drop, base, leg out, printing a high. So the previous bullish trend line to the one that we previously drew is this one. And this is the type of exercise you're going to do when you're doing the coaching program. Okay. You're going to draw up to 5-10 trend lines on a chart if you find them, and then another one, 20 a day for a week, for 2 weeks, for a month, and then we move on to the next module, because drawing the trend lines on a chart is not enough. You need to practice this for days and weeks, so that the rules and structures and different kind of candlestick price actions, different candlestick patterns, can sort of get imprinted, okay, on your mind. If we continue to the left, we've got a rally, base, and a drop. We've got our first peak. All this, CP. This, peak, rally, base, drop. So the previous trend line would be like this. Okay, that will be the trend line. The origin of the move, as you will learn in the lesson, will be a demand level, which took control last July 2024, and it's been playing out. So this is how, okay, I just added one more lesson here. I shouldn't have, but you will see it in the creation of the imbalances. Maybe if I remember, but this is Expo. Oh, okay, sorry, this is not Expedia. Shit, sorry. The XP World. Oh, well. Expedia. Come on. Expedia Group. Sorry. But well, it is what it is. Okay. This is what we have on X World Holdings Incorporation. Okay. Since I said that we were going to do Expedia, let's do Expedia too. Okay. So Expedia. This is what we've got. Okay. Potential peak. Well, it is a peak already, but we do want something like this, and 2 peaks for a trend line, blah, blah, blah. So we cannot draw a bearish trend line. This is a CP, rally base rally, rally base rally. Again, one CP, two CPs, okay? And this is a drop, full candlestick body, drop base rally. So what do we have here? One valley, and here another valley. So we can connect the trend line like this. The trend line is already broken, okay? But this would be the latest valid trend line connecting two consecutive valleys without cutting through candles, as you can see. We connected two, and then price formed this continuation pattern right at the intersection with the trend line, and then continued to rally, broke the highs, and now we've got bearish price action trying to drop here. So, previous trend line, okay? We've got a peak here, rally-based drop, but didn't even print a low, so we just ignore this one, okay? This is a valley, drop-based rally, but it printed a high, but now we've got this one, another high. So the previous trend line, the previous valid trend line to the one that we have already drawn on the chart could be like that, like I said, because we've got this V shape that printed a high, and then the second V shape printed a higher high, okay? This complies with the tilted W rule, okay? Good. So this could be it for Expedia, okay? For the latest two. If we go to the smaller time frames, probably it's going to be tricky because of price action over there. We go to the daily. So one thing that you need to remember, each time frame has its own trend line. So here you can see these are the weekly trend lines, but they have nothing to do with daily trend lines, okay? Nothing to do. So we delete this one, and we can see a clear peak over there that printed this low. We go left, and we've got another peak. So the latest trend line would be something like this. Okay, that's what we have on the daily as per the bearish trend line. So on the bullish trend line side, we've got like this value over here that prints is high. We go left, another one. So this is the high, and the second impulse creates a higher high. So the previous bullish trend line would be drawn like this, okay? Bearish trend line will be like that. Bullish trend line will be like that. But the trend is a different thing. We need accomplishments, and we're gonna see or how the trend works based on the trend line and the elimination of opposing imbalances, okay? So this is it, more or less. I've been talking about trend lines and the exceptions and overextension using 3 or more CPs. Also the impossibility of drawing trend lines because you cannot cut through candles. Another rule, you cannot cut through candles. You cannot use 2 CPs to connect a trend line. And those are more or less the rules, okay? In this 1 hour video, we saw probably all of them. And hopefully you will understand how the trend lines are drawn because I explain them step by step. Thanks a lot.